All right, YouTube gang, it's time for a new video, and this time I want to do a little bit of teaching around market maker models, because I really believe that those are the signature in which the market is booked. So I want to go over a short trade I took on oil on Friday and show the exact reasoning behind it. So the chart markup, what I was looking for exactly. And I think this is going to be a valuable session, a short but compact video on market maker models. Well, first of all, the market maker model I saw forming was this exact one. So we had a buy side of the curve, then a smart money reversal right there, and then the sell side of the curve coming back to the initial low. Well, why did it reverse here? Well, first of all, you need to be aware of liquidity levels. So this specific level, if we go to a daily chart, you can see that there was a fair value gap right there. And it tapped the 50% of the fair value gap. So I was looking for a short from the fair value gap, which is also a balanced price range, because we also have a BISI on this side. So it's a strong PD array to trade back to the low. Well, if I go back to this, you can see how that exactly lines up with the level of the smart money reversal. So it tapped the 50% of the daily fair value gap and started coming down. Well, I was kind of late in session, so I took a short right here. But let me go over why I took the short right there. So now you know we have a higher time frame level. Higher time frame order flow is also bearish. So whenever it's bearish, you want to look for a retracement leg to then trade lower. And every retracement is the buy side of a market maker sell model. So every retracement in a bearish market is the buy side of the curve of a market maker sell model. So please remind yourself of that. So that means that this in itself is the fractal of that on a lower time frame. This right here is also a smaller time frame sell model. So we have a buy side of the curve, sell side of the curve. You see those fractally happening like everywhere. So if I draw out the particular boxes of the market maker models, we always have like the initial consolidation, an accumulation phase, sometimes two of them. We get the smart money reversal, which is a fractal market maker sell model in itself. Well, this is a little bit of a harder read, but let's say this is the first distribution and then a second one. And when I saw this happening, I also looked at, let me remove those boxes, liquidity. So the liquidity that I had on my chart, first of all, was the previous day high, which was also the daily fair value gap high, and that was the 50% of it. Then we had a London high and an Asia low. What we see over here is that we did a double purge. So we purged the Asia low to then come up all the way up here for London high and then start displacing to the downside again. So that means that we have purge 1, purge 2. It's a double purge. This is the drawn liquidity, the initial consolidation level, which also aligned with previous day low. So this was the Thursday low. So all in all, everything lined up that once you start to see a market structure shift, which happened like this, you know, all right, I'm ready. So what we see over here is that we made a breaker, which we displaced through. So the breaker block is the last low that was formed before raiding the highs, and then it got displaced through. So market structure shift with a fair value gap. And this exact fair value gap is where I pointed out to the community, here I want to go short. oil short. So you can see it here. My annotations were not on yet there because I was late to the chart. So I said, I'm going short here. Annotations will follow. So you can see that same fair value gap right there. That hit. And then it was a perfect short. This I closed around here for a 1.2R because it was the market close on Friday. But as you can see, it doesn't even matter what day it is, what session it is. Eventually, when the market opened on Sunday, it did that fast move, as I always say. So let me go over some final details. If I put back on the boxes, what you always find in market maker models, and this gives you the high probability entry, is whenever it starts coming below the first accumulation zone, it will do a retest of that zone and then move lower. What you can see over here, this is the line. We had a retest of the level, a second retest, and then that final fast move. A lot of the times it gives you a really fast confirmation move to the downside. In this case, it was around weekly open, so I did not hold through this because I was trading on futures, so I closed the market close. But that doesn't matter. The algorithm still makes all the signatures it's programmed to do. So I hope you had fun with this. Study it and look for those signatures inside of the market maker models because it's so much fun to trade these things. And it's one of my favorite, literally, models to trade. All right, so have fun with it. See you in the next one. Bye-bye.